Investing is simple, but most people fail because they pick the wrong behaviour. After 25 years of investing through property booms, market crashes, crypto cycles, and some painful mistakes, the importance of behaviour is one of the biggest lessons I've learned. This video is about building a simple investing system you can stick to long term. My goal is simple: to help you to understand money, to help you invest stress-free, and to help you build real wealth with the possibility of retiring early. Why most investors fail. Most people think investing failure is dramatic and happens quickly. In reality, it's slow and boring. Here's the pattern I've seen again and again for over 2 decades. People start investing, markets fall, headlines turn negative, doubt creeps in, they stop investing or they sell. That's it, that's the failure. But here's what I've learned through trial and error. And after reading hundreds of investing books over the last 7 years. Markets falling is normal. Crashes are part of the system. Volatility is the price for long-term returns. But nobody explains this when you start investing. Nobody explained it to me as a young, clueless 18-year-old. So when a portfolio drops like 20%, people assume something is broken, when in reality, the plan is working exactly as expected, as it should. Index investing works because it assumes you're human. It removes the need to be clever. It removes the need to be emotional. And it removes the temptation to constantly interfere. If you remember one thing from this video, remember this: your behavior matters more than your intelligence. If this type of info resonates, by the way, subscribe to the channel so we can build wealth together. Who am I to talk about investing? Well, I didn't grow up wealthy, not at all. I grew up on a council estate, surrounded by people who worked hard but never really got ahead financially. Money was stressful. Financial security is what I'm pushing hard for to get for me and my family, and it's something I've been looking for since I was around 10, when I started taking an interest in money, like washing cars in the summer, for example, to get some extra money. That's why I started investing 25 years ago, not to be rich, so I could finally be secure financially, so money wasn't stressful anymore. Over the years, I've tried almost everything. Buy-to-let property since 2002. I tried to sell aloe vera products in my early 20s, among other failed attempts at business. I've been picking individual stocks since 2010, crypto investing since 2017, and index investing seriously since 2019. This, by the way, is my favorite way to invest, and it's mainly because it's stress-free. I've made money, I've lost money, and I've made just about every mistake you can think of. Since focusing on education, discipline and systems in 2018 and 2019, I've built 6 figures across multiple asset classes. I'm much more comfortable now than ever before, but still I'm not satisfied. And it's because I want financial security for my family. I want financial freedom so I can spend more time with my family, so I can do more of what I love, like Brazilian Jiu-Jitsu, which has become a bit of an obsession, to be honest, over the last 16 years. That's what I want for you. Not to be obsessed with your favourite sport, but to be okay financially, more than okay. Why index investing works. This video is pretty much a step-by-step guide to investing with low-cost index funds. But if you want more info so you can invest with even more confidence, see below for a recent playlist. Index investing works because it removes the 3 biggest enemies of wealth: ego, emotion, complexity. Instead of thinking what stock will win, what's the next big thing, is now the perfect time you ask one simple question: will global businesses still exist in 20 years? If the answer is yes, you win. Index investing allows you to focus on family, focus on health, focus on living your best life. Basically the stuff that actually matters the most. While your money quietly compounds in the background, you don't try to beat the market, you become the market. And historically, markets have rewarded patience far more than brilliance. Risk tolerance. Before you invest a single pound or dollar or whatever your currency is, you must understand your risk tolerance. This is where most people go wrong. Ask yourself honestly, if my portfolio dropped like 20% this year, what would I do? Panic and sell, stop investing, or stay calm and carry on? I'm going to tell you about 3 risk profiles to give you more of an idea of what I'm actually talking about. A 100% equity portfolio offers the highest long-term growth, but the biggest swings. An 80-20 stocks and bonds portfolio, balances growth with stability and is easier emotionally. A 60-40 portfolio focuses more on capital preservation and is common closer to retirement. Let me use another example, what I use when I do one-to-one calls in my school community, and the link can be found below. Anyway, imagine you're 25 years old with nothing saved, but you've done some research, like watching videos on this channel, and you know how important it is to invest. So you decide to invest for 30 years, so you can potentially retire in your mid-50s. In this scenario, you could go 100% stocks because you've got time on your hands to ride the inevitable ups and downs of the market. But what if you were 60 years old with 750,000 spread across various index funds? In this scenario, you might go 50-50, 50% stocks, 50% bonds, because you want to preserve your wealth and you can't afford to go 100% stocks because it's probably too risky. There's no best portfolio. It's down to the individual. So you need to give this serious thought. On a scale of 1 to 10, with 10 being the highest risk, what score would you give yourself as an investor? Let me know below in the comments. Your goals, another big one. If you realize how important your tolerance to risk is and how important your financial goals are after watching this video, that would make me a happy YouTuber. If you don't know why you're investing, you won't last. Ask yourself, what do I want this money to do for me? Do I want to retire early, pay off my mortgage, work because I want to, not because I have to? Financial freedom looks different for everyone. Your goal doesn't need to be flashy. It just needs to be meaningful to you, specific to you. When your why is strong, discipline becomes easy. Goals give volatility context. Too many people ignore goals and it means a total lack of direction. From my experience, like me before 2018, I never set any goals and it contributed to average results as an investor. But things have changed for the better since late 2018. And a big part of that is the fact I now set financial goals every single year and review them every month. Now, obviously, this is not financial advice. I'm not giving out any advice. I'm just trying to help you with my investing experience. Mindset, because psychology is what's going to make all the difference for you and your results as an investor. Most people panic on red days, chase hype, listen too much to the crypto bros and the 19-year-old experts on TikTok. Most people consume financial news daily. They change strategies constantly, but successful investors are different. They think in decades, automate everything, ignore the noise, review annually, which means they only look at their investments once, maybe twice a year. Your biggest enemy is not the market, it's your own emotions. Index investing will help you avoid emotional investing. That's from personal experience and again from the hundreds of books I've read over the last 6-7 years. The mistake that cost me everything. In 2010, I thought I was smarter than the market. Big mistake, but I was clueless and had zero financial education at the time. I started investing in the stock market in 2010 after listening to the lads at work. They were all telling me about how they knew lads working offshore who'd made hundreds of thousands on raw copper shares. I wanted a piece of the action, so I steamed in without doing any research. Long story short, I lost our life savings like 10 months later. What makes this story worse was that my wife was due to give birth to our second daughter and we were due to move into our second home. This caused a lot of arguments, a lot of stress, and I wouldn't recommend it. Please learn from this painful mistake. That mistake was unfortunately one of many during my negative decade. Now, I was quite miserable and negative between 2008 and 2018. I was rubbish with money and I was an average at best investor. This was partly down to the financial crisis of 2008, but mainly down to poor emotional intelligence and a lack of financial education. That painful decade is one of the main reasons why I try to help people with this channel. Despite what people think, what I'm going to say next is massively important. Financial education is the real wealth multiplier. We were never taught about inflation, ISAs, pensions, or things like compound interest at school. Sorry, but I've massively understated compound interest there because once you understand it, you become a long-term investor. Simple as that. Let me give you a personal example. I invested £500 a month into a stocks and shares ISA at 18 for 6 months, but stopped and spent pretty much all of my money on a lad's holiday to Ibiza. Huge mistake. This was down to a lack of financial education. Now, let's say I was taught about things like compound interest and inflation at school. I know for a fact I would have invested from 18 to now, so that's a full 24 years. If I got average returns of 10%, that would mean I would be sat on £594,000. And looking at that huge amount, 450,000 is made up of interest earned. This is the power of consistent investing in index funds, the power of compound interest. Inflation, the silent tax. Inflation destroys cash quietly. Food, energy, housing, you will probably almost definitely feel it every single day. Cash is guaranteed to lose purchasing power. Assets fight inflation. Here is a little definition from Investopedia. Inflation is a gradual loss of purchasing power that is reflected in a broad rise in prices for goods and services over time. The inflation rate is calculated as the average price increase of a basket of selected goods and services over 1 year. High inflation means that prices are increasing quickly. Just look into how bad inflation has been in Argentina over the last 20 years. If you do, I can almost guarantee you will invest into assets. What index funds actually are. Index funds track markets. FTSE Global All Cap, S&P 500, MSCI World. You buy thousands of companies at once. You don't beat the market. Again, you become the market. If you invest in the S&P 500, you'll get exposure to 500 of the top companies in the US. Or if you invest into the Vanguard Life Strategy Fund, you would get exposure to over 7,000 companies, global companies all around the world in one fund. UK index fund examples. Strong starting point. Vanguard FTSE Global All Cap, Vanguard Life Strategy Funds, iShares MSCI World, VUSA S&P 500. I invest for my daughters using the Vanguard Life Strategy 100 Fund. There are loads of examples. Do some research here on YouTube, pick like 10 index funds, then look at the performance of each one, and then maybe invest into 2 or 3 funds, the ones with the best performance. UK platforms, here are a few examples. Vanguard, lowest cost, limited fund choice, and you can't invest into individual stocks. Hargreaves and Lansdown, full market access. Higher fees, yes, but really good customer service. Loads of products to choose from. AJ Bell, low cost, wide choice. Trading 212, etc, etc. Choose based on fees, ease of use, platform reputation, and customer service. Here's a little tip that might help you out. You can look at Martin Lewis's website, Money Saving Expert, to compare some of the different platforms. How to buy index funds, step by step. Choose your platform, open a stocks and shares ISA, tax-free growth for tax-free growth, general investment account or SIP, deposit funds from your bank account, search for your chosen index fund or ETF, click buy and put in the amount, the monthly amount, confirm and complete the purchase. Automate monthly investments to build wealth consistently. This is helpful info that can get you started, but from my experience, beginners want a bit more help and support. If that's you, consider joining my private investing community on Skool. Again, the link can be found below. Can you reach £1 million? Here's a few examples of how you can do it with low-cost index funds. £500 a month for 30 years with 10% returns can grow to over £1 million. £1,000 a month for 23 years with 10% returns can grow to over 1 million. These are potentials, not promises. Markets deliver lumpy returns. Your contributions and discipline is the important thing. With any investment, there are no guarantees. Here's a little exercise. Decide how much you can invest each month and write it down. Use the examples in this video as a little guide and learn all about the 4% rule. This will give you a rough guide on how you can build a pot of money and retire on the interest. If you want more info on the 4% rule, see below for another recent video. Bitcoin for high-risk investors. High-risk, high-reward strategy based on Bitcoin's historical average returns, 80% annually over the last 10 years. If you invested £500 a month for 10 years, for the last 10 years, you would have ended up with £3.5 million in 2025. Let's use a what-if scenario. If Bitcoin averaged 40% over the next 10 years, and you invest £500 a month again, you would end up with just over £750,000. However, Bitcoin is extremely volatile. Past performance does not guarantee future returns. You must be comfortable with extreme price swing. Bitcoin can accelerate your wealth journey, but only if you can handle the volatility. Just look what's happening at the start of 2026. Here's what you can do to get started. Read 5 investing books all about index funds and investing in the stock market. Watch 5 YouTube videos all about index funds. You could look at 5 different channels, take some notes maybe. You could watch my latest playlist here on YouTube, then ask me any questions in the comments. Then you might narrow it down to like 5 index funds, then focus in on the past performance, like average returns over the last 5 years. So this video has been my attempt at helping you with low cost index investing. Again, if you need more help and support, you can join my private investing community on Skool or have a look at my recent playlist. Both links can be found below.